Looking at the action in the pre-market right now, we see the futures deeply in the red. That's after the markets closed at new record highs following that stronger than expected jobs report. Is this a reaction to Jay Powell in your mind?
Possibly. Hard to read into what one morning's futures say, but Chairman Powell last night on television in his interview with 60 Minutes certainly reiterated the higher for longer stance of the Fed, that March is very unlikely. And you're now seeing that in Fed funds futures. The market after the payrolls data, after the FOMC, and then Powell, all those three things have pushed probability of a first cut much more to June now, whereas even a week ago, there were still pretty decent odds they could get something as early as March. So, higher for longer certainly is going to be a headwind for equities. But then the other side of it is what's spending. If the consumer holds up, and that's what the payrolls suggest, that's an offset, at least to a degree.
All right. So with all that in mind, and again, we're coming off that Jay Powell commentary on 60 Minutes. What's your WEX word of the day?
So my word today is connections. And I say that because I think it's especially important right now for investors to be making those connections between the catalysts, the market players, the economies, the markets, whether we're talking higher for longer policy, Middle East conflict, China's challenges, both market and economic. You have to connect the dots right now. And I think that's what leads me to being still cautious on smaller and regional banks in the United States. Higher for longer regulations, that exposure to office commercial real estate, all of those things I think are going to make a rebound for that sector less likely short term. Remember, we have 117 billion in office commercial real estate this year that either has to be retired or refinanced.
All right. So you're mentioning some of the regional banks. Jay Powell did address that yesterday, saying that he's, quote unquote, working with those regional banks. He said some may have to close, some may have to merge. I also want to continue to look at earnings. We saw very strong results from mega cap tech. Going forward, do you think that what we're seeing from earnings from mega cap tech, does that continue to justify those valuations? I know you're not as granular as saying put money here day to day, but just longer term, do you continue to be bullish on mega cap tech?
I am bullish longer term on mega cap tech because I think they have a number of comparative advantages in a world where technology is going to play a larger and larger role in our day-to-day lives across industries. So, yeah, do you want to buy a bunch here? Probably not. But when you get those pullbacks, like we've seen a little bit on some of the earnings, those are opportunities if you don't have the exposure you want to build it over time. I think these are stocks that are going to help the dollar higher over the coming decade, and U.S. equities, I think, potentially outperform rest of world peers over the next decade. That's a really long-term view, but that's the power of technology in the current environment.